Hello, good morning. My name is Gustav Sjöberg and I'm a professor at Stockholm University and more precisely at the Stockholm Center of Commercial Law, which is one of the co-organizers. It wasn't this morning, but nowadays. It's a great honor to chair a panel of such distinguished and experienced persons. It's a wide variety of experiences, and I look forward to the possibility of having different perspectives. I think Professor Coffey's talk was very much on markets and securities law and things like that. I think the perspective now will be more broadened to banks and institutions and ways of communicating in supervision but I think I have experienced a difficulty talking to persons specializing in other areas than banking and insurance and so on. Please perhaps state what areas you're focusing on when you're speaking. Even if you have different backgrounds, it's also very striking, as I see it, that there are similarities. And one of those is that you have switched from private to public sector work. Three of you, not Lars. Lars H. There are two Larses. And there are two economists and two lawyers. And so there could be, I think it will be, mixed perspectives. I introduce you very shortly, start with a foreign guest, Jordi, who is a lawyer, and as I understand it, you have gone from a law firm and to the Spanish Central Bank and then to ECB's banking supervision. So we can guess what you will talk about. And then we have Lars A., who also is a lawyer, and had many years in public service before going private and to the Swedish Securities Dealers Association. And then we have Fredrik, who's an economist, also spent considerable time in the government offices, but went to private practice a bit early and now presently as the Swedish Investment Fund Association. And finally, Lars H., he's the exception, has not switched, having spent his entire career in the public domain but has a variety of experiences ranging from the central bank to the financial supervisor at the moment. I will try to mix the perspective in also the selecting the order, speaking order. And I start with giving the floor to Lars, who's an economist in public sector, then Lars A., who's a lawyer in private sector, and then Fredrik, who's an economist in private sector, and finally Jordi, lawyer and public sector. I think we do it like you start with individual presentations for 10 or 12 minutes, and then a very brief comment if you want to say something on the respective presentations, and then we let the floor open for a long discussion, rather long. I leave the floor to Lars H.
Thank you, Gustav. It's a pleasure to be here and an honor. And Gustav has already disclosed that I am not a lawyer, but I try to take the economist perspective on the issue of enforcement. I should also say, for safety reasons, that the views expressed are not necessarily shared by Finansinspektionen. Once upon a time, I was a policymaker as a board member of FI, but that was a long time ago. If you want more recent policy perspectives, you talk to Gustav, who left the board at the turn of the year. So I won't discuss, as not being a lawyer, I won't discuss the detailed legal aspect of enforcement policy, but I still look at, oops, what's happening? On enforcement as a tool to achieve policy objectives. And I probably will use enforcement and sanctions interchangeably. I'm not sure I'm not making a clear distinction between the two. But on that note, I'd like to start somewhat impolitely to rearrange the title of the panel, because I think we need to start with purposes and discuss uses after all, thereafter, because what we're trying to achieve is key to what we want to do. And so, since to approach the purpose of enforcement, we need to start with the purpose of regulation. After all, enforcement is a means to deal with firms that break rules, right? And on that level, I think, and I'm going to talk about specifically about banking and legal persons rather than fraud and private persons, as was the topic of the focus, my primary focus of Professor Coffey. And then I think it's quite straightforward, because the purpose of regulation is to counteract various markets failures and incentive conflicts in financial firms that, if not corrected, will threaten financial stability and consumer protection. That's sort of the ethos of financial supervision. And that leads to the conclusion that firms that provide financial services must meet certain requirements and standards. They need to behave appropriately according to a set of rules and guidelines. And first of all, so effective, this is very irritating. Turn that on. Maybe that's the problem. Is that better? I think so.
Yes.
Okay, I'm sorry. So we need to maintain certain standards, and effective regulation therefore requires, first of all, a licensing procedure to control entry into the market. And that requires supervisions to ensure that firms, once they are licensed, continue to behave according to the rule. And supervision then, to be effective, requires that supervisors have tools to allow them to intervene against incorrect behavior or other ways handle firms that don't play by the book. So the purpose of regulation is to affect the behavior of firms, and enforcement action, being a tool of supervision, do just that. They force change in the firm's behavior, or ultimately by revoking the license, then you force you change the behavior of the firms that are active in the market simply by throwing them out, or putting them into resolution, as the case may be, which hopefully also leads to a change in behavior, and that's at least the purpose of resolution. But to put enforcement in context, we need to see then that supervisors have several tools to affect behavior, and no, I'm sorry about this confusion. How do you ensure that firms behave according to rules without short of enforcement? Well, the first thing you can do is to help firms understand what the rules are, and that can be quite effective, because most firms, at least our experience, is that they do want to play by the book. Know what the rules are, they are more likely to a good starting point for that. And then explaining in documents how the motivation behind the rules, etc., also helps people, or other firms, behave more in line with rules. And as an example, we see at the EU level, there much effort is put in by EBA and the others in providing Q&As on to clarify how rules are interpreted or to be applied. And at Finansinspektionen, we're considering ways to make more use of that in our own, at the national level. Then how firms behave in practice is discovered through supervisory activities of various kinds. And once in a while, you will discover that not all rules are respected by all firms all of the time. That's sort of inevitable. And then you have to decide how to make firms adjust their behavior, which is to do the right thing and do the things right. Again, there are several tools short of enforcement. You can directly inform a firm that it is wrong. tools to affect behavior then. You can inform the firm that it's lacking or doing something wrong, and possibly what it should do to get things right. And an example, Finansinspektionen after supervisory action, supervisory inquiry, we send a formal note to the firm, and they think may contain things like things should be remedied or given more attention. They're filled with qualitative terms like improve, enhance, and clarify, typically related to things that are qualitatively regulated, risk management, internal controls, etc. And it's also made clear, explicitly or implicitly, that if these changes are not made, FE could come back, and then more serious consequences could follow. And such reports are often want to abide by the rules, but they're not necessarily very efficient in the sense that they're only received by one individual firm. And again, we want to communicate more broadly. So we are considering ways to communicate our discoveries in other ways. The general reports on supervisory findings, we presented one of those just before the summer. And we're also considering how to make it public, at least in part, the specific reports that we send to firms. Again, making these observations public is likely to affect behavior and reach many firms in one go. And this is in our own internal parlance, and we call this communicative supervision. We're still short of still just in the supervisory sphere. But sometimes we find more serious issues where recommendations simply aren't enough. And then we will launch a formal enforcement inquiry according to the predefined process. And then the purpose of that process is to determine what has happened, is it serious, is it a serious breach of rules, and what, if anything, should we do about it. And then, of course, the ultimate sanction in such a process is the revoking of a license. Because any system where firms' entry is controlled, you need to have an exit mechanism where licenses can be revoked. In that sense, the death penalty is always an option in the supervisory catalog. But clearly, let's follow from the logic, because if you have a license, if you get a license, the license must be revocable. But it is that from that simple fact, I think, follows that you need to have a broader spectrum of sanctions at your disposal, because there are cases that are serious but not so serious that a withdrawal of the license is proportionate. And so enforcement must cover a wider spectrum of actions, and of course it does. I'm an economist, so I'm sort of discovering things that are already there and trying to explain why things look the way they do. And in the Swedish case, at the less intrusive end, we have cease and desist orders, possibly accompanied by fees in case of non-compliance. And in more serious cases, we can issue warnings with sanction fees. And then, of course, again, there's the death penalty. And depending on the circumstances, it can be more or less easy to know what to do about a particular breach. When a firm doesn't meet fundamental requirements, such as capital requirements, or fails to correct this, it should be taken out of business or sent into resolution, as the case may be. But many legal rules are qualitative, and what is good enough, in some sense, is a matter of judgment. And this calls for judgment also when sanctions are meted out. And of course, with judgment comes complexity. And among other things, and there's also something that Professor Coffey touched upon, enforcement is a very costly process. A lot of work from supervisory teams and legal teams go into any enforcement inquiry, and as decisions are taken by the board, a lot of management time is also devoted to any formal sanction. So I'm certainly not qualified to describe the sanction process in any detail. There are many people in the room who know this much better than I do. But let me put just one thing that we come across once in a while, and that is to what extent should supervisors take into account corrective measures that firms have taken, in particular from the time when the problem was discovered and when the sanction is to be meted out.
If the only purpose was to ensure that this particular firm does this particular thing right, then okay, you could say, well, they corrected, so we drop the case. But of course, that would not be very sensible, because it will leave the field open for firms to play hard and tough, and then correct their behavior only if they're discovered. And get away free from any consequences, and that's of course unacceptable. So enforcement actions must be taken also to firms that try to show remorse. And stronger actions against repeat offenders can also be justified on this ground, as FI has demonstrated in certain well-known cases in Sweden. So a few words about the formalities here also. Enforcement actions are corrective and coercive. And they're also formal decisions, and that means first that the motivations for the decisions are spelled out in public documents. They can be scrutinized by all and everybody. And that is of course also a corrective mechanism. Other firms will discover the consequences of breaking rules in reputational or monetary terms. And second, formal decisions are subject to appeal. And that sanctions can be appealed. In Sweden, there are it's done in administrative courts at 3 levels, possibly. And that, of course, means to protect the rights of firms. So in that respect, a firm subject to a formal sanction is in many ways be better protected than if supervisors start relying on very informal measures to make firms do what they consider is right. And of course, appeals and the decision by courts give an authoritative interpretation of the rules, which helps the supervisors next time around when the sanction may be on the table. So summarize, enforcement is a means to affect behavior, and it's very much an integral part of the regulatory and supervisory toolbox. It's also a very complex undertaking, and that's a reflection of the fact that the rule book is very complicated. And a complex and graded system of rule has to be combined with a graded system of measures to affect behavior. And that leads, as I said, to complexity and lots of discussion. But there is no rule saying that life should be simple, and there's certainly no rule saying that financial supervision should be simple, because the rules are complicated. Thank you.
Okay, is it on? Okay, start of thanks to Mikael and the Swedish House of Finance for the invitation and the initiative. I will try to tackle this from the side of the good guys, the firms who want to follow the rule book, who want to keep the rule book, and be a bit from Professor Coffey's fraud and fraudster. But one comment I have to say, listening to him, is that the tackling of cross-border fraud is a great problem. If you look at the European Union level, we have a cross-border trading, cross-border services, and if someone is not playing by the book, it's the national FSA who have to take action on the security side. Which means if the national FSA do not take action, there are no remedies in the European Union. There is a vague one in the ESMA regulation about taking a process about when a national FSA don't take action, but look at that. 27 participants in the board taking a vote against another participant saying you are not, we are taking action against you, we are taking, that's more or less an impossible situation. Of course, the views I now present is my own. It's not the Securities Dealers Associations, and it's of course not the ESA Board of Appeal where I take part. I will also start with another. I think the explosion, the tsunami of regulation after the financial crisis had not been studied enough. It had given the FSAs much more power. They have not only gotten more resources after the financial crisis, they got a lot of more power through the legislation. And what type of legislation? Many of you can this much better than me. On the European, we have had massive legislation on level 2, on the Council and the Parliament, through regulation and directive. We had on level 2 getting an explosion of legislation, for, implementing acts, delegated acts, technical standard. Added to do, we have guidelines, recommendation from the ESAs, and then we have those doubtful question and answers. Our members love them, but I have some doubt about the legal impact they do. And then, added to the European Union legislation, we have the Swedish legislation. You have the rule book of the Swedish Finansinspektion. And all this should every firm know. And even every single Swedish person should know the law. You need saying, if you don't know the law, it's not an argument in court. Everybody has to know the law. And I say, in this area, it is impossible for an individual and possibly also for a firm to have a knowledge of the whole rule book. The legislative process in EU brings a lot of problems too. You can get justification for the rules from the Commission and from the Parliament. When looking on the amendment from the Council and what is happening in the trilogue, it's just in dark. You don't know why they have changed it and what the changes mean. Here is a lot to do in a more transparent one. Secondly, the legal quality. Much of the legislation last 8 years have been too vague, not coordinated with other legislation, and very problematic to interpret. Finally, about legislation, two minor things. The first is one I have said many times before. There is nowhere in the European Union you can find comprehensive picture of all legislation on security side. You have to be a real good lawyers and a real good IT person to get the knowledge, to get it right. Secondly, one thing the US have is the new action letter. Time after time, we see that the European legislation is not in time, is incomprehensive with the facts and so on. There is no possibility for the Commission or the ESAs to say, just stay, keep, have a grace period till it works. Instead, you have to make a solution which think is that, oh, please, the FSA, don't take action for the moment. That's wrong way. I think it should be legislated that either the Commission or the ESAs and ECB has the power to have a no action letter when it comes to this legislative problem. Finally, before I go to enforcement, I think it's need to study how this legislative tsunami have made impact on business, on how banks, security firms and insurers are acting. In my mind there is a risk that there will all be compliance officer in the banks and the machine have to give the advice in the future. The legislation and the legislative tsunami means, in my opinion, that you have to have more room for dialogue between the supervisor and the supervised. Have a possibility to ask questions, to discuss interpretation of the rule book, or to get clarity. You have, of course, have to have guidelines, question and answers, and then like Finance Institution has this fee forum and such discussion. But we also have and must increase the possibility to ask questions to the FSAs, in my opinion. And I think also the FSA has to be transparent what they are saying in closed rooms between one or two banks in a discussion. If there's something of general interest, it had to go public with that and so on. That will be a way forward for the good guys to be able to handle the legislative tsunami in the future. The last question Gustav asked me about was if the sanctions should by separate bodies, and my answer was clearly yes. I don't think you can have all the different roles in an entity organization. You can't be legislator, police, attorney, and judge in the same person. And it's also, I think, that it's important that the process and procedure of sanction system or enforcement should be transparent and public. I know, I think that's. I will finalize my points with saying that one of the reasons for my 2 points about sanction system that it should be a special entity, a tribunal outside the FSA, or if it's inside, it's clear separated from the SAE, and that the requirement of transparency is what I think an American judge has said. Not only must justice be done, it must also be seen to be done. It must be really clear. And that goes for the whole procedure. I think I will stop here and finish as usually with something from Oscar Wilde. And this time is, whenever people agree with me, I always feel I must be wrong. Thank you.
Thank you very much. Fredrik, before that I think I should say something for the benefit of our foreign guests. They talk about Finansinspektionen, and that is the Swedish Financial Supervisory Authority, which is a single supervisor supervising and regulating. We try to make a difference, I hope, between regulation and supervision here. And that's the the single regulator and the single supervisor, except for the parliament, of course. It's integrated. Yeah. That's what I meant. Okay, sorry.
I tried this one, right? Okay. Thank you for having me here. As I'm already been outed, I'm not a lawyer, and to be honest, I'm not really a trained economist either, so you have to bear with me. And I just also, like Lars said, Lars H, is this opinion. So if I express something that might be offensive, or if you can follow my argumentation, it's just Google translation that made this impossible. Anyway, it's my personal opinion, so I better say that as well. So we do have some. If you look at the Swedish market, I represent the investment fund industry, and as you can see on this picture, this slide, it's a retail business in Sweden. 80% of all Swedes save in investment funds, and with that, all the consumer protection issues are at the center. So I will focus on consumer protection issues in this presentation. And of course, the fund industry is not really in a strong position to criticize the supervisor or even giving advice or so, because we have had a lot of scandals in the Swedish markets. We have had massive mis-selling. We have had possibly frauds in funds. But just for the sake of the discussion then, I give you some of my observations during this time that I've been closely following the supervisors' work in Sweden, and hopefully there is also some general conclusions to be drawn from this. First of all, and we do also have a special situation with the investment fund market in Sweden. Three out of 4 funds are registered in foreign jurisdictions. So we have the cross-border issue, which is quite central, and a lot of the problems we have seen in the Swedish market is actually from the, what did you call them, Mr. Coffey, the dark corners of the globe, dark corners of EU. So so we do have also the cross-border problems. But just say, I think that we do have in general, a very strong and effective supervisor in Sweden. So we're not complaining too much, but at least these are the observations I would like to discuss with you. So first of all, the mission on consumer protection, I think the mission might be too wide. If you are a government and you give an instruction for an agency, you have to be quite precise, otherwise the agency take the mission and do their own interpretation on what to be done. And I think we have some issues with that in the Swedish market. Also guidance, we're talking about enforcement of the regulations. Guidance is essential, but there are some pitfalls with guidance that you have to be very careful. And actually, Lars, I would like to comment on later on about some things that you said. It's easier with guidance than with regulations, but the quality cannot be, it's still very important with good quality in the guidance. And last one, communication. We have to get the market on the right track, you need to communicate with the market participants. But when you do that, you have also to be quite certain that you're not getting unintended consequences. I will point out some that I see in the market. So first, this is the mission for the financial supervisor in Sweden, and the consumer protection is one of the areas, and they also have a special mandate or mission to write a yearly report back to government about the consumer protection issues that they see in the market, and also to propose new legislation if they see that it is a lack of legislation within in this field. So they write this yearly report, but they don't only write it to the government. In the last years, they have had sort of like a consumer day with a big media attention, and also like a preview for the journalists to get the conclusions on the. So they're using the media to get the message out to the market and also to the consumers. And of course, when it's not this very detailed, the consumer protection mission, then the agency, the FSA, has done their own homework, so to say, and written a communique, something that they have, what do you call that? A framework for consumer protection. It's a sort of a platform document where they lay out the strategy that they will follow. And the thing is that, and they call essential in this is the communicative supervision, that they want to communicate their expectations on the market participants. And this is what I would like to focus a little bit on. These are some of the problems that we find when you look at this, and this is just some examples. The duty of care is central. How do you look at the best interests of the consumers? And we have a legislation, especially not almost for all kind of companies in the financial market, especially for the ones like giving advice and so on. You should look at the consumer, the client's interests. But if you're a product company, you have other kind of definitions on this duty of care. In the investment funds, for instance, you can construct your product, but when it's constructed, the duty of care lies within the mandate that you have or the contractual basis that you have with your client. It's in the product you should have the duty of care. And then, of course, you also have the new regulations about target market, and so you have to figure out for whom is this product designed for. But here we see some problems in the expectations from the supervisor, that they want us to figure out or to explain that we should have to explain a product that's just been authorized by the FSA. At the next moment you have to explain why it should be in the market, if it sort of creates value for the investors or value for the consumers. And this is and some other examples that we have seen. This is just a debate. So this is a part of the communicative supervision. And it's an example from the debate we have had in Sweden about active and passive funds. So they're expressing get what you're paying for, but we don't have a price regulation in Sweden. You can charge whatever you want for an index fund, but you should be very transparent, and there are rules for how transparency should look like when you're selling funds. Active funds underperform their index, so therefore it's room for further price reductions. Also sort of an indication that they have a market intervention attitude to this part of the market at least. And the board should review if the product is worth its price. It says nothing in the regulations about that, but it makes sense for a general audience, but it's not a part of the regulations. So these are some examples, and when you compare this to the consumer agency, another agency in Sweden which actually have the in general consumer protection as a mission, you can see that they have their consumer protection mission is limited to enforce the regulations on this area. And this is not the attitude of the financial supervisor, that they are sort of having a very enhanced or ambitious interpretation of the consumer protection mission. So just that's one observation. And then of course you have the guidance, and as like Lars A said, yeah, the market participants, they like guidance. They don't really care so much about if it's good or bad. They just want to have something to hold on to make the right thing. They want it to be easy to do the right thing. But this is some points then. Regulations issued by the supervisor have some profound benefits. You have a scope, and the objective is defined by the law, and then you have the possibility for a supervisor to define, to make regulations in a specific area. And there is also prescribed procedure, including remittance, that we like a lot in the industry, because then we have a dialogue about, is this sound? Is this a good way to formulate or to design the regulation? If you compare that to the communicative supervision, it's not necessarily based on law, like customer value for money. It's not based, it's just a general consumer protection or enhancement of the consumer. It's not based on law. There's no remittance procedure, so you just get this signaling or communication from the supervisor through media or whatever. not appealable. And this is actually a point where you might think that it's good for sort of the system that you have a cheaper way than enforcement, and that it's not appealable, it doesn't take so much time for the supervisor and so on to make the right thing. The problem with if it's not a sanction, and which would have been appealable, if it's not, then you don't know really, is this the right interpretation of the regulation, or is it not? So that creates a lot of uncertainty in the market, and there are some communications that the market doesn't agree with the supervisor on, like interpretation of market abuse regulation in Sweden for investment funds, for instance. We have some problems there. And it can be changed, so you don't really know. Sometimes contradicts authorizations. So for instance, you can have a fund of funds that is in the statutes invest in their own funds, in the company's own funds, but then you have a report just recently where the authority criticized in general fund of funds that invest in their own funds. So it's problematic. And I also think that the organization might affect the output. And I think, like we were talking about enforcement then, it is, even when you're guiding and so on, it is important to have a duality system in the supervisor. So you can raise a question, is this really the right interpretation of this EU directive or whatever? And most often you see the issues raised goes down to the same civil servant who answers the questions once again, and you don't have a duality in the system. So the rule of law issues, risk. We have seen risk of that the statements with low quality. If you like my presentation here, if you don't have a formal report, if I forced myself to put everything down, I probably would have been a little bit more balanced and thought through things. But you know, if you just talk, there's always a risk that it's a low quality in the statements. And we have also seen problems where it's unclear if this is opinion and sort of a market guidance, or if it's based on regulatory assessment. And that might end up with a legal uncertainty. And the lack of appeal is a problem if you have sort of just only the guidance. And of course also, as sanctions are cannot be used, if you are outside the law, so to say, or no, don't quote me on that, please. No, but if you have an extensive interpretation of a regulation, you cannot sanction on it. So you just express an opinion, but then of course you cannot mention one company and say this is. So you have to criticize the whole industry, and that creates a lack of credibility for the industry, even the ones that want to follow the rules. And you always have, as a supervisor, you do have the possibility to propose a new legislation. It's not very common that you see that, especially compared to the criticisms that the industry has taken from the supervisor. So, and why? So why should we care if it's not binding? So why should we care? And I promise you, a lot of the industry participants have not read the platform documents that on consumer protection issues that the supervisor published. But if you have a supervisor communicate things that you don't think that it's naturally so, or how to say, very clear, it creates a legal unclarity, and that creates problems for the market participants. And also, if you have a sweeping criticism of an industry, you have a decreasing confidence of financial service, and you might have unbanking issues if it's too severe. And also, you have you sort of, if you have bad performance in funds, or if you have bad manners or whatever, you have bad products that are in the market, they are still authorized, but they can be in the market. If you go out and criticize them as a supervisor, you might create a situation where the public have very high expectations on consumer protection, for instance, like, oh, well, this is not a good thing, but it's still authorized. So and if you can't enforce them, your opinion, so to say, that creates also a problem of trust between the participants. So my conclusions then, I think that the government should reformulate the mission in the government's instructions for the supervisors' work with consumer protection. I think that you have to be very, the guiding needs the same quality as regulating. You cannot see it as a cheap way of regulating. So you need to really be concerned on how you express your guiding. And you should therefore also develop a two-way dialogue instead of one-way communication. We have a lot of ways now, new experiences from the supervisor with communication, like FE Forum, which is an open forum. They invite on special reports or issues. But that's a one-way communication. Most often they cannot answer questions directly at the FE Forum from the audience. And in the sake of the quality-based communication, always on a formal report or at least some structured way. And also organize the supervisor to ensure duality. And this is, I think, is an important issue. And when expressing expectations, be certain that they will be obeyed. Otherwise, you create an uncertainty in the market where some of the participants might not agree with the supervisor and just continue their business as usual. So, sorry, Lars. Okay, thanks a lot.
So many thanks for the invitation to this really nice seminar. Same as my colleagues in here, well, the views I will express here are just mine, and they are not binding the ECB. So after this disclaimer, in my presentation, I will first provide you a short overview of the SSM. Since we are quite young organization, well, let's spend a couple of minutes in that. Although afterwards, Professor Allegrezzo will for sure provide you with a, let's say, more structured, academic, and thorough view on that. So I somehow delegate on her this part. So who we are? The SSM is the supervisor of the Eurozone. And we are one of the three pillars of the EU banking union, together with the single resolution mechanism and the forthcoming, well, so to say, European deposit scheme that's still under debate. What do? We are a pure banking supervisor, we are a prudential supervisor. So on the negative side, we do not supervise anti-money laundering, we do not supervise consumer protection, we supervise prudential requirements, governance, that's capital requirements, those type of technical regulatory aspects of the banking activity. And how do we do that? So by means of a joint venture. We are a joint venture between the ECB, so the institution I work for, and the national competent authorities of the Eurozone. And we split the banks we supervise. So the ECB takes care of the direct supervision of the significant banks. That means that 82% of the banking assets of the Eurozone, that's quite big, 119 banking groups. While NCAs directly supervise the rest of the banks. We call them the less significant supervised institutions. So about, focusing on the topic of this panel, what do we do when it comes to a breach, to a non-compliance? And first, allow me, let's say, a first thought, which is, I think it's important, and maybe it's obvious, but it's worthwhile. I mean, we are talking about a regulated business and a supervised business. So this is not a bakery shop where the baker is on his own and bakes and decides how a croissant should look like. In our banking business, the bakery shop, the baker is there, but close to the baker, there's a baker supervisor. So baker has to report how are croissants done, which number of croissants, and how are the flour reserves in the bakery shop. So, and that with that silly thought, it's important because by default, we have a range of tools supervisory tools that we have at hand in case things don't go the way it's supposed to be. So that are the supervisory measures. And purpose of these measures is, well, to keep things in due shape and to address shortcomings at an early stage if possible. And there's a huge variety of tools, from just a phone call, an informal phone call. It's a way to address a shortcoming. But then we can escalate, and we have a whole range of tools. So we can ask for a capital add-on, plans to restore compliance. Within the normal, let's say, set of supervisory tools, there are many ways to address breaches. And beyond that, since it's a sensitive business, also we have enforcement. Enforcement, we can read enforcement in two ways. First, enforcement tools that aim at compelling compliance. So in case we detect an ongoing breach, we have tools to force or to provide further incentive to the bank in non-compliance to return to compliance. And the key tool we have in there are the periodic penalty payments. So when we impose a requirement on a bank, and those requirements is not fulfilled within the deadline we provide for, we can impose a daily penalty per day of infringement. So obviously, I mean, the entity has an incentive to return to compliance at an early stage. And besides this kind of enforcement, compelling compliance tools, we have let's say the pure classic enforcement measure as sanctions. And the purpose here is quite self-explanatory. It's to punish and to cause deterrence to the entity and to the public, because one important aspect here that we publish, let's say by default, we publish all sanctions we impose. So market consumers are informed. In here, well, say the allocation of sanctioning tasks between this kind of two partners, the ECB and NCAs, it's a little bit complex. To make this kind of long story short, we'll say that the ECB has just the power to impose pecuniary fines. So when it comes to non-pecuniary fines, or in the case we have to sanction natural persons, we instruct the NCAs within the SSM to open proceedings. So as we see here, we have a huge variety of tools at hand. To make life more visual, I mean, if you see a police officer, I mean, the belt of modern police officers, they have a large number of tools in there. Normally they have a stick, they can have this kind of pepper gas spray, they can have this taser, that's quite common in the States, and then finally you have the gun. So what to use when? And I would say that's one of the key questions. I mean, when it comes to this large setup of tools, the purpose is to use the right tool in the right moment. And obviously, since we are in a supervised business, the goal is to have at hand as many resources as possible. So the better the supervision is done, in principle, the more tools you will have at hand to address the situation in a proper way. That doesn't mean that shouldn't be a room for sanctioning, but well, if you are able to detect something in anticipation, well, in principle, you could escalate and you could, let's say, explore the difference to that hand. If situation deteriorates or you are too late or it demands for, let's say, a really strong response, well, you may directly explore the enforcement side. Obviously, let's say, even if we take, we have sanctioning tools, we have enforcement tools. Sanctioning is not our business, it's not our goal. I mean, our mandate is to be the gatekeepers of the Eurozone banking system. That's clear. Punishment is not a goal, but we are not shy at sanctioning at all. I mean, we have to reinforce our framework. So sanction it's something we explore, and we have already imposed during this close to 4 years of EU banking supervision. And about how we make use of these sanctioning tools. Well, we have 3 key principles. So penalties have to be effective, proportionate, and dissuasive. And those are not just nice words. Those principles are in the SSM regulation, and we do have to respect them. And so that's mainly about finding the right balance. Obviously effective, that means that has to have an impact on the institution, on the behavior. Proportionate, obviously we cannot go too far, but not even too low. So it's about fine-tuning. And dissuasive. Dissuasive, I would say, somehow comes also by default because of the general rule of application of the sanctions. So there's this deterrence effect. It's created. So after having this overview on our enforcement tools, I would like also to provide you some views on the organizational setup. I will talk about ours, which is not good, not bad, but somehow it works. How we are organized when it comes to enforcement. Well, there's the supervisory side. We are organized in a way that the ECB supervise these large banks in the Eurozone. However, we do that in collaboration with the national competent authorities. So we have these joint supervisory teams. So the supervisors that take care of supervising banks are organized in teams which have a mixed composition. Some are staff members of the ECB, some others are members of the national competent authorities, and they do supervise banks. Those joint supervisory teams are the ones in charge of making use of the supervisory tools. So this set of supervisory tools belong to them. And whenever they spot something which deserves, let's say, further action, escalation, which is more serious, they refer the breaches to the independent investigatory unit, the place I work in. So the ECB has a dedicated unit to the investigation of breaches, and we do this in an independent way. So we are separated from the supervision, so we are not contaminated, we don't have to prevent any kind of risk of capture. We are somehow also isolated from the decision-making bodies. And that's also important. So whenever we prepare a proposal for a sanction, that goes to the supervisory board and governing council, but they cannot send this back to us, in the sense that they cannot instruct us to, well, you guys, you were too soft or you were too harsh. I mean, no, if they disagree, let's say, on the substance of a proposal for a sanction, they can amend themselves, but they cannot send the file back to us. So we are somehow, our investigation is somehow privileged, protected, so to say. We have a vast range of tools when investigating suspected breaches. And we also take care of the hearing of the entity. So the right to be heard is granted by us. And that's pretty much it. I think we are fine with the schedule, so we have more time for discussions.
Thank you very much. Thank you. Presentations, you touched on several of my favorite difficult topics, but I will not go into that now. I think we give the opportunity for each and every presenter to comment on the other ones. So we start in the same order, I think. Lars, H.
Well, from what Lars and Fredrik said, at least bears out my notion that enforcement is about regulation, because Fredrik talked only about regulation or possibly lack thereof, and this takes too far to make this a comment on consumer protection in general, so I won't go into that. But I admit that this is a complicated area for Finansinspektionen, because duty of care is very much a qualitative concept and hard to interpret. And as far as I know, Gustav would know, Finansinspektionen has not an issue a sanction based on a lack of duty of care.
No, not as far as I know.
So but still we want to we have our mission to change things, affect behavior, and what we do. Well, we try to communicate as best we can. And then there are all these issues, how far can we go? You mentioned this, you get to what you're paying for, we commented in one case. In that case, it was a closet index fund, and where the fund manager in public said that we're not actually trying to beat the index. And that we felt was in a case where investors wasn't getting what they're paying for. That did not end up in a sanction either, I think, but it's sort of an example that we want to say this could not be okay. And similar, I think you mentioned this own funds that invest in funds that invest in their own funds. We didn't say that it wasn't okay, but we wanted a clear justification of why the fund happened to give priority to its own funds. And those are just sort of examples of things. But clearly, we wouldn't mind having a clearer mandate, but changing the legislation. Again, I bow to the EU law experts here, but it's not easy for us to say we want to have tougher rules or more lenient rules. Well, we are to implement rules that are given to us primarily by the EU or by legislators. So we're in that situation. But I think the general observation, and others could comment on that, is that it's very hard for FE to issue sanctions based on very qualitative criteria. I think would hesitate to issue a sanction on a bank that is not sound either. But still, we need to interpret soundness in some way. Rebecca could expand on that. Lars mentioned the ongoing, coming back to sanctions. Do we need a sanction board or not? Again, that is a political decision. We play by the rules that are established for administrative authorities in Sweden. I understand that this is sort of the way it's done. And it's not, the FE is not unique in this regard. And what I've heard from, I talked before putting my feet on this podium, talk to experienced people in the industry. At least the FE has never been criticized we have lost in other courts, but we've never been criticized for not having respected sort of the protection rule of law and security, sort of the handling of the issues. Because there is a similar, as you already mentioned, there is a lot of communication between FE and any entity that is a part of a sanction inquiry. And that's one reason why it takes so much time, because we send letters back and forth and try to. But it is a decision to have it this way, and it's not unusual in the Swedish context. And as for the time being, we follow the mission that we've been given. Thank you.
Lars?
I won't prolong the debate about sanction and sanction system and just but one comment. Fredrik was discussing guidelines and the need for guidelines to be built on report and so on. My starting point is a little bit from another angle, because we on the security side have had so many legal acts who has been rather confusing also. I mean, just you like MiFID II, PRIPS, even more, and as always, EMIR have been a lot of question, lot of open question how to interpret the rules, and lot of uncertainty by, I think, financial market actor to how to do it in the right way. In that case, you need to have a dialogue. You will also have need to have a guidelines, a discussion with the FSA. The problem is, of course, here that this is EU legislation, which means that in theory, I think the national FSA have to go to European competent authority and discuss a common interpretation, which is probably not time for. But we have to have a more openness in these issues when the legislation is not up to the right standard. Thanks.
Frederick?
Just something on sanctions and court rulings. But I know how Sweden voted in ESMA from my knowledge. Oh, sorry. Oh, that was good. That was not on. No, but I do know how from other countries, from my colleagues in Europe, how Sweden has voted in ESMA board on different issues. So it just gives you some information on what kind of dialogue do they have in other countries, and we're not having a Swedish position in the same way. That's a problem I see when we come to European legislation.
Swexit is a too big question for us today.
No, we want to take over it all.
Jordi?
Yeah, it's just to open up the debate. I found really interesting the reference to death penalty Lars H. made. And then I had a funny thought about death penalty. I thought, oh, we are lucky we are talking about banks and not persons. And then I thought, oh, wait, we do have death penalty for bankers because we can disqualify them. And there's kind of a, well, because we are focusing on, let's say, and I'm sorry for the industry guys, that's not personal, but I mean, we are talking a lot of the, let's say, the corporate side, but well, there are some personal liabilities of bankers, and there's room to be explored in this regard, and that's something we might also want to consider. I'm saying this from the position of the ECB that cannot sanction natural persons, but we do it with sources to national commercial authorities. And it's something we actually do. So that's something important, no? Because at the end of the day, runs are not run by themselves, but there are persons, people taking decisions, which have implications. And we learned quite a lot from the recent crisis.
Okay, thank you. Then we open the floor. I think Michael has, sorry, yeah, one more.
Just one comment on this. I mean, there is a difference, of course, when you're talking about legal person or private person, and when, as you say, for a bank, you can withdraw the license. In Sweden, if the Swedish FSA can do it, the bank can go to court, but what do you do when you have lost your license? Then you have lost your business and everything else. When it comes to private person, it's another thing. I mean, they have got both human rights, and there is the amount of fee you can get as a private person is now as comparable with criminal ones. And I think Professor Coffey said it was $100,000 in US. It seems to be cheaper in US than in Europe, because it's 5 million euros for a private persons here. So it's much more expensive for a private person to make a fraud in Europe. Thanks.
The strange thing is that legal persons have human rights according to Strasbourg court. Michael is the first one.
Yes.
So thank you very much. As expected, it was very interesting. I have many questions, but I'll start with one. And I also like the death penalty reference. And you specifically said death penalty is always an option. But what about SIFIs? And what about the potential cases where you have clashes between different supervisory objectives related to macro-pro? Well, this is micro-pro area with enforcement actions. And also to link together with what Jordi talked about, personal liability. And is this if you credibly cannot revoke the license of a SIFI, is one way to go to enhance sort of the personal liability of the decision makers? Tough one.
No, I think that's why we have resolution. So you don't revoke the license. You take control of the bank and throw out the board and the managers, and then it's run by, in the Swedish case, the Swedish National Debt Office, which is the resolution authority, and then put back into business. I mean, that's the whole idea of resolution. We can debate, that's another panel, about the credibility of putting a systemic bank into resolution, but that's the legislator's solution to the problem you described. So I don't think, I mean, if you take resolution seriously, you can get rid of that's a way of simulating a normal bankruptcy. And if that was credible, why do we need to regulate capital? Because those that hold bets on bank would internalize the riskiness and so on. That's not where we are, and the legislature didn't draw that conclusion. They regulated other things as well. But structurally, it's resolution that is the solution to the problem you described.
And most important, do not use taxpayers' money.
Is it on? Yes, Lars Gorton. I am a colleague of Gustav at the Stockholm University. I note that it is very, very difficult to change the legislation coming from Brussels once it's there. Whereas in the US, it seems to be possible. The Dodd-Frank Act, and maybe Professor Coffey could comment on that. It seems to be possible to go back, to roll back a legislation once you find, no, we went too far. But in Europe, once a legislation is there, you can just go on. You never roll it back. Of course, that's probably the reason, the impossibility of changing things among 27, 28 member states. But then I have a question, again, with respect to the EU and ECB. How many of these significant banks are you supervising today? That's one question. And once you have come up with a decision, can that decision be appealed? I suppose that must be the court of first instance, or the big court. Thank you.
On the ECB side, we supervise all the banks, all the 119 banks I listed. Actually, they are bank groups, so they have branches and so on and so forth. So we are talking about a large number of banks. And obviously, let's say it's rule of law. All decisions, not only the enforcement ones, but also the supervisory ones, which have kind of a negative effect on the banks, can be challenged. We have two layers. So there's a possibility, which is optional, to go to administrative board of appeal, which is the independent administrative board that takes care of this internal review, or you can directly or subsequently go to the Court of Justice. Yeah.
Professor Koppel, would you like to comment on the? Well, I'll leave the answer to this question. Is this on? Well, let me just stay within the narrow framework. I next speak in public in France on September 20th, where the French Ministry of Finance is celebrating the 10th anniversary of Lehman's fall and pronouncing all the problems solved. I don't think all the problems have been solved, far from it, but my topic is going to be about what I call the regulatory sine curve. There is a sine curve from rapid enforcement in the US, rapid change in the law in the immediate aftermath of a financial crisis, and only then all financial reform legislation in the US follows a major financial crisis, and then it gradually gets repealed. There have been major repeal bills passed in the U.S. within the last year, pushed heavily by President Trump. Some of the things that have been repealed, we used to be trying to regulate banks of over 50 billion. Now we're regulating banks of over 250 billion. That's 5 times higher. So there's a new zone of unregulated. SIFIs have been cut back greatly. Many things have changed. And finally, no one here has talked the whole day about what I think was the #1 cause of the 2008 crisis, which was the unbridled, unconstrained use of incentive compensation. Congress passed legislation to really cut back on incentive compensation in banks. It's been totally cut back, totally ignored. Not a single rule has been adopted. So I think there are many things that were not done. I'm not predicting a major financial crisis, but I think the exposure is definitely there. So the short answer is, in the U.S., you can really cut back on legislative reforms, and it has happened, and you can simply not implement. Congress passes laws. The agencies have to implement the rules, and no rules have been adopted on subjects like incentive compensation. Okay?
Just a question. To a large question, I mean, we haven't seen any rollback in the EU. We have seen on the security side, they are trying to make some changes in EMIR, realizing that it was not fully working from the start, but no rollback in the European Union. And it takes an awful lot of time, 3, 4, 5 years to make a change in a legislation at level 1. Thanks.
Okay, my question then, Johanna Liebeck, Nordea again. I want to go back to the issue of the sanctions setup. I mean, this is really a very difficult issue. You could argue that a present setup like we have in Sweden would lead to conflict of roles. You could also argue the other side, that it also gives the supervisory some strength. So there's different ways of looking at this. What I would like you to do is try to walk in your opponent's shoes. So if you're from a public sector representative here, do you see any drawbacks of having all the roles within the FSA, and benefits of moving it to a sanction board? And if you're from the private side, do you see any benefits of having it the way we have it today, and drawbacks of moving it to a sanction board? So try to take the other side's position, please.
Okay, should I start? Okay. No, I understand the problem, but I don't. It's not like it's not engaging me so much, I must say. I think that if I were a supervisor, I would like to have all the resources. So it's very good to have the lawyers or the legal competence, and then also you have the supervisors out there watching what's going on, and then sort of formulating your sanction. And I think so competence way, I would like to have it sort of close. Be regarded like outside the FSA body. Or if you have it like this way, it's not. I'm not so concerned, to be honest.
I'm more concerned. I mean, I think a process inside an FSA has to be extremely transparent, and the whole procedure should have been described in detail, how the enforcement process and the sanction, so people know exactly what is going to happen and so on. That goes for that. It's back to what I said as a start. When you get so much power as the FSA got after the financial crisis, with power comes responsibility, and you have also to show that justice is done in the right way. It's not to say that it's not working in Sweden. It's worked fairly well, most of the thing, but on principle basis you can be the same. But more transparent to the procedure that, and really China's wars between the different units in the process could. Yeah, I mean, I'm no, but I can't.
I tried to be more two-sided than Lars. Then, no, I think that it is a potential concern, and as Fredrik pointed out, that if you appeal, you lose your reputation a second time. But then if you want to be deterrent and dissuasive, I think that is maybe not a drawback of a system in an industry where the basic premise for a license is trust. So it is but I think it is a basically, as Johanna indicated, it's about the strength of the supervisor. If you want a strong supervisor, you probably should give him these powers, and then ensure that the general requirements on due process and so on that governs all Swedish government authorities, because that's the rule book that we are following here. And then we have also we have a public description of our enforcement process, how it's to be done, and we communicate as much as we need according to those rules with firms that are subject of an inquiry. But ultimately, it's a trade-off of how strong a supervisor you want, and that's ultimately a political decision.
Well, this was mainly a Swedish question, but still I will step in. I mean, thinking on the supervised entity's shoes, well, I honestly don't see much of a trouble in the setup we have. I think it's quite fine and fair to them. So, and I wouldn't see a benefit of having something else. Let's say I think it's quite compounded. It's clear in both the law, and we are also quite clear and transparent to the banks that are under investigation. And so from this perspective, I think the system works fine, and during these 4 years has proved to works. Definitely they have the possibilities to appeal, and also for the good or for the bad, it's in regulation. Whenever something it's under, let's say, judicially appeal, we inform. So we publish the sanction imposed, but also inform that this is under appeal, so public knows that this is at least debated or contested by the entity. So from the other side perspective, I think the system it's okay, and it shouldn't be a matter of concern.
This is one of my favorite difficult questions, and I give you just my impartial view on this, since I'm an academic and not involved in this. I used to be, but the higher the threshold for a formal sanction is, the bigger the temptation to use some other tools, I will say. So if you have a higher threshold, namely going to court and whatever, the temptation to use other ways of getting your will is bigger, and there's a very broad range of supervisory instruments to use, and they say you don't comply. It's very cumbersome to go to court, but we think you should have more capital, or you should do this or something like that. That's a general thing which is not often addressed, but I think that's the more the sanctioning is a continuum, the more you can use the full scale, so to speak. More questions? Lars again?
Thank you. In my generation, we are many Larses, but look at a school today, ask in a class how many Lars there are. There's none, but here we are, a few. Now I'm Lars Nyberg. I'm just retired, let's say. I have an international question to you, I mean, there are, as we know, a number of less well-run banks, let's say, in Europe. And there are also a number of less well-run national supervisors, which indeed is one of the reasons for creating the banking union. Now, I've seen a number of cases where at least there should have been sanctions to banks if it had been the Swedish FSA running the business. So you must have seen that in the ECB as well. And how do you solve this kind of conflict when you have perhaps let's say a national supervisors with heavily political traditions when it comes to running its business, and then you have your way of working? How do you solve conflicts when you see different views on how sanctions will be done?
Well, first of all, I would say the SSM it's per se a response to this concern. So by ways of, let's say, I would say, passing on this big chunk of responsibility on banking supervision to the ECB, we somehow try to avoid those national capture or national bias, you name it. I mean, I would say that solves a big part of the, it tries to address this concern. But obviously, I mean, we are let's say, a newcomer in the supervised business, in the sense we are quite young, and that's something that we are facing, in the sense of not only, let's say, wrong behaviors, but still the big challenge we have if we are creating a new supervisory culture. And that's something that takes time, because we have, well, Europe, it's made up of different traditions and different ways to see the same reality, which may be correct, all them, or all wrong, but and we have to find a consensus. So there's a legislative consensus, but also there's kind of a hands-on consensus. And that takes time. And that's about, developing methodologies and working together. Also, this setup of joint supervisory teams helps a lot. Because obviously, let's say the responsible for the supervision of a significant bank, normally it's not a national from the same country. So we have mixed compositions, and having both ECB staffs and national staff working together reinforces and helps developing this culture. So I think we are somehow, and I'm quite optimistic, in a virtuous circle. So we have to make it move.
I just want to comment also. There is a sort of a nuclear option when you're not agreeing on like in UCITS directive and also Swedish legislation, I guess in other areas of legislation as well. If you have a company that is acting not following the directives, you can forbid the company's business within Sweden. That's one part of the Swedish investment fund legislation. And of course, then you can wonder why we have seen some serious frauds, possibly frauds in Swedish financial market or investment fund market with companies, funds from abroad. Why is it not being used? And this is something I find very problematic. Why did we have the nuclear option? That's sort of the regulation of last resort, but it's not used. And I have not heard a public discussion of if this legislation, does it even work, or is it such a mess to talk about, to register or file the case at the ESMA and then explain why you have done it in the Swedish market, and then you get a relationship problem within the ESMA board, because next time, they don't want to go on your sort of route when it's the next decision you have to take. So I think it's an interesting feature in the legislation, but it's not used, and I wonder if it's ever going to be used, and therefore I also think that you should sort of maybe develop that on a legislative way.